This is your daily real estate syndication show. I'm your host, Sam Rust. Pleased to welcome Arn Cenedella today. Arn is a longtime friend of the podcast, a real estate broker and investor with nearly 50 years of experience in the real estate industry. He's founded Spark Investment Group in 2020, which is a vehicle that allowed him to transition his single-family portfolio into multifamily syndications. He currently manages and operates a multifamily portfolio as a general partner. It's got over 800 units and close to 100 assets under management, 100 million that is. And in addition, he's a limited partner in over 500 units scattered across both the Southeast and the Mountain West. Arn, welcome to the show. Thanks for joining me today.
Yeah. Hey, Sam. Good to spend some time with you, and looking forward to having a nice chat about real estate investing.
So Arn, you and I were chatting a little bit before the show about the change in the environment. Everybody, unless you're coming out from underneath a rock, you know that interest rates are higher and valuations are down, at least on single family homes and on multifamily, kind of across the board. Euphoric times of late 2021 seem to be officially behind us. And I think that investors who have invested over the last couple of years are coming to grips with the risk profile of the various deals that they're involved in, right? And that's something that I hope syndicators across the board did a good job of messaging, that this is not a risk-free investment. Now, there's a lot of reasons, and we're going to get into some of those reasons today about why we continue to invest in multifamily and why we think it's well positioned for a recession. But you have 45 years or so experience in commercial real estate. This isn't the first cycle that you've seen. How do you approach an environment, just not even like from a specific, what do you do about interest rates, but just psychologically? You've got all these investments, you're active, you've got some passive investments, you're all over the place. Speak to our passive investors maybe for a moment on just your mindset as the cycle turns, as we're headed in a different direction from your well of experience.
Well, thanks, Sam. Sure. I can understand why people are concerned. For many investors, this is a totally different environment that we haven't faced, say, in the last 10, 20 years. And I think the first thing I would say is this is all part and parcel of kind of a natural economic cycle. I can tell listeners, I bought my first house in 1980. I paid 11.75% for my mortgage, and I was happy I made that investment. 11.75 is about double what people are paying today. And so I think with real estate, you need to take a long-term perspective. You kind of need to believe in the fundamentals. If we were to look at housing prices, rental values over the last 40 years, the strong trend is up. And generally, in my experience, what I've kind of seen is we have 5, 6, 7 boom years where values and rents increase. And then we typically have 1 or 2 kind of down years where there's a slight pullback from those higher values, at which point kind of a new plateau is established, which then sets the stage for another period of 6, 7 years of growth. So if we were to look at the multifamily space, we've had exceptional growth over the last 10 years. COVID didn't really slow it down. And so it's natural in my mind that we do have some kind of pullback, but I would encourage investors to keep in the front of their minds the idea that the fundamentals, the housing shortage, the growing population, inflation, all points to continued benefits of real estate investing, and to not pay too much attention to the, let's call it, day-to-day fluctuations in the market, but instead focus on the long-term perspective of the benefits of owning real estate, cash flowing real estate in growth markets in the United States. And I think if you do that, you can ride out these kind of temporary downturns that we're now right in the middle of.